Let's get started, see what we have going on in the news today. We'll sit down with this week's market analyst in a second, but first let's check out the latest USDA crop progress report. Starting with corn, and the report reveals 9% has been harvested. That's above the 5-year average of 6%. 54% of the corn is mature, almost 20 points above the 5-year average of 36. Now 68% is rated as good to excellent, and that's unchanged from a week ago. As far as soybeans are concerned, producers reporting the crop at 67% good to excellent. That's down a point from a week ago. In the previous report, 31% of the crop was dropping leaves. Now it's over half at 53%. And harvest is just beginning with a number of 6%. We're joined by Dr. Frayne Olson for this week's market report. He's with North Dakota State University Extension, serving as a crops economist and professor. Frayne, thanks for being here this week.
Well, thanks for the invitation. I appreciate it.
First up, you've looked at the numbers on the latest crop progress report. What are your thoughts?
Yeah, I mean, crop development has been ahead of pace now for a little while. Harvest for corn and soybeans are just kind of ramping up. And again, very similar pace to what we saw last year from harvest progress. It looks like crop condition ratings are still holding up very well. So we should be ready to go here as soon as the weather turns and gets a little better for us.
Let's dive into soybeans for a minute. When we were on the phone getting this interview set up, you told me that you could spend a couple hours on this topic. So I know that it's something that you're really passionate about. We've had a good soybean crop again this year, and combine that with the good crop last year, all the inventory that's still left over. Where's everything going to go? Talk to me about where soybean producers are right now and how you see this playing out.
Yeah, so I mean, we got a larger yield report out of the last Usda. It was kind of pretty close to what the trade was expecting, a little bit higher than they thought as an average. But we're going to have a lot of beans. And of course, the big issue right now is the tariffs and trade negotiations, in particular with China, because they are by far our largest buyer. And so with the very slow export pace, almost non-existent export pace that we've had into the Chinese market, we're looking around, looking at alternative markets. But it also means that the flow of grain this harvest is going to be very, very unusual. Typically, if you look kind of historically, about 60% of our soybeans flow to the Gulf, and about 25% flow to the PNW or the West Coast market. And of course, North Dakota and then South Dakota and Central Nebraska, all are primary West Coast markets. The problem we've got is that the West Coast market for soybeans is basically dried up. We haven't had any bids for export sales into that area, that quadrant, for most of the summer. The extended, there's no bids out now until into February of next year. So the West Coast market has really switched to a corn market. They're pumping corn through very quickly, but there's really no soybean flow. So the export sales we've gotten so far on soybeans have primarily gone through the Gulf. And that's, again, causing some disruptions or some concerns about how is the soybean as well as corn going to flow as we move into harvest, which is causing some basis issues here locally. And I think farmers are going to have to be very careful as they move into this winter season, because it's going to be very, very different than what we've seen before.
And I know that storage is an issue too, and I know a lot of soybean producers still have that inventory from last year. Any idea what the percentage is, or how many producers still have inventory from last year? So I mean, what are they going to do as far as storage is concerned?
Yeah, storage is going to be at a premium, not only at the local level, at the farm level, but also at the commercial level. When you look across the crops we have, the primary crops, corn, soybeans, wheat, tremendous incentives in the marketplace right now to store grain, both in carrying the market for the futures portion of it, as well as some pretty depressed basis levels, especially for soybeans. So again, a very, very strong signal to store everything. And of course, we don't have room to do that. There's a stronger incentive, in my view, to store soybeans. I think, again, there'll be more of a market incentive to try and push corn through the system if you have a shortage of some storage. But it's going to be a challenge. Up here, as we get further north, again, when you get into South Dakota, North Dakota, our basis levels for soybeans are horrible, which really is farmers aren't planning to sell anything at harvest, which they normally do. They sell at harvest or shortly after. Again, the challenge is going to be, it will likely take, even if the tariffs were to go off very quickly, it's still going to take several months for the grain logistics systems, both the railroads and the barges as well as the ocean-going vessels to be able to readjust and compensate for additional trade in soybeans. So the transition time is going to be a lot slower than most farmers think, which means they will likely have to store soybeans much longer than they had originally expected.
And maybe a farmer's watching this right now and that farmer's saying, well, I'll just put my soybeans in temporary storage. But it's kind of challenging when it comes to temporarily storing soybeans, isn't it? Why is that?
Yeah, and I've been working very closely with one of the ag engineers, Dr. Ken Hellevang, up in at North Dakota State. He's kind of the storage expert, has been doing this for many, many, many years. And he talks a lot about how do we use temporary storage, because I think there's going to be a lot of that around. A lot of pressure again to store grain, whether it be at the farm level or at the commercial level. The challenge we have with soybean is because of the higher oil content and the protein level versus corn and wheat are, you know, carbohydrates, they're starches, so it's a lot easier to store that for long term. The storage characteristics of soybeans, especially for long-term storage, are very different. Farmers are comfortable typically with harvesting, soybeans in a bin, storing them for a few months, and then bringing them back out and marketing them. But again, this year, because of the flow of grain is going to be a bit unusual and more than likely disrupted, the longer term storage has very different characteristics. And so it's going to be a challenge, and we got to be very, very careful as we put grain in the bin and make sure that it stays cool, that it stays dry and in good condition.
And now, not just for soybeans, but for other crops too, what's the sense you've been getting from farmers as of late? Are they concerned about the crop situation? What questions do they have, and how do you answer them?
Yeah, okay, so there's really two interconnected questions. One of them is how do we manage the harvest flow? Again, as I said, usually this year there's going to be a stronger incentive to try and move corn through the system. Farmers up here, because we have a very short season up here and very compressed harvest time period, we rely on on-farm storage to help with harvest efficiency, making sure the combines are running, the grain carts are running, the trucks are running. And if we have to start pushing that through the corn, through the elevator system instead of to our local storage, that can change the flow of grain. And then if you're going to store soybeans, again, how do we do that on a long-term basis? The other challenge we have is first the storage issue and then harvest efficiency, but the other issue is cash flows. Again, up here in this region, we tend to store the corn and the wheat and market that throughout the year. We tend to push the soybeans through the system a little earlier. That generates the cash flow we have to pay back bills. And again, the fact that we may have a slightly different arrangement this year is putting a lot of pressure on farmers to say, how do we manage our cash flow? What do we sell? What do we store? What are the incentives in the marketplace? And how do we get the financing part of it to work as well?
Mm-hmm. And finally, last question, how do you see the weather impacting things right now?
Well, the short-term concern, of course, will be for harvest. To make sure that we get the crop out of the field as quickly as possible. We get it out of the field dry, it's in good condition. It'll really mitigate or reduce any kind of storage problems we have later in the year if it goes into the bin cool and dry. If it comes off a bit wet, then it slows things down because we got to dry it. And that's not only going to be an issue at the farm level, but again at the commercial level. So I'm recommending that farmers watch the basis levels very carefully, because that's kind of your local market signaling to you what you need to do and what are the incentives, whether you sell it now or store it later.
Sell it now or store it later. Dr. Frayne Olson, we appreciate your insight, and we'll talk to you again real soon.
All right, thank you very much. I appreciate it.